The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this beautiful day here in Boston. It is really spectacular weather on this May the 4th, 2016. Dow's up 6 at 18,361. S&P is up 1.70 at 2165. The comp index is up 8 at 5,188. The futures up 325. The E-mini futures having made a 2171 round number high at a peak E the other day. Now, the selling pressure we've had since then has been kind of ameliorated over the last two bars. That's going to intraday yesterday and this morning. So still a leg D after a 21.4% rally since the February low of 1787 in the futures, going to the most recent, as I said, round number 2171. And that's really fascinating. What's even more important about this is if we go on, we can go to the gold contract, and the gold contract right now is up 5 at 1369. It looks like we will get a leg D, what I call a gray D, as long as it's underneath the high that was made back on the 6th of July at 1385. And what we're looking at here is all it needs to do is to go above 1374.2, the high of the second, 2 days ago. That starts leg D. I thought that gold was under a little bit of selling pressure over the last 2 days, but in fact, what's very interesting, if I put it together with, look, the DXY, the dollar had a nice rally. It's still up about 9 cents at 95.66. Excuse me. However, the deepness of that peak D top that was made on the 25th of July at 97.57, going down to the 95 area, the quickness and steepness of the decline suggests that the dollar's going to have trouble rallying above the 96 area, and it probably might have to test the 94.70 to 94.50 area over the coming few days. Now let's just go on here, because what we're looking at is one of my key ingredients that I always use for my subscribers to my opening call. We look at the volatility index, and I had shown charts over the weekend that suggested that there was still, that the selling pressure that you would normally get in an S&P if it goes to a leg D, IWM, the Russell 2000 daily leg D in the Chapman wave. I think I need to just do this in case there are new people listening. Let me just find it as I'm talking. There it is. What's really important about the volatility index is that holding under the 13s in the 1252 area that we're in right now, and having gone there so quickly, and what I'd shown in the charts of the Dow and many of the other indices is that so far pullbacks have been quite moderate, and that the uptrend has been intact. And that the Dow, even though it used up time, it really was only 350 points from its all-time high, recent high, that is. And that's really nothing when you use 9 days of consolidation. And that suggests that we should be going a little higher. We did grab a long position in the Dow yesterday, early morning, as the Dow went from negative to positive. And let's see how that can hold. But this is what's interesting. The volatility index, the VIX index, which to me, people call it... it's a scale of fear and greed. I say, that's kind of simplistic, except when you are going to the top, it's absolutely fear, like the Brexit high of 2672 at leg F, and they're going to a peak F in the Chapman wave methodology. And let me just show you this for a moment, just to give you a sense of what I'm talking about. This is the simplicity of the Chapman wave methodology. Come down, make a most identifiable low bar low, and start a rally. If that rally goes up and then comes down and doesn't break the low, it could even touch it to the exact penny. If it goes under it by 1 penny, that negates it. You have to wait for a new buy signal and a restart. But basically, you go up and it's called leg A. It's called the floating letter. As it makes the top, it turns around, and that becomes a letter, and it goes alphabetically in uppercase on the upside, lowercase on the downside. What we look for are 4 consecutive higher peaks, and as long as it can be very jagged, in other words, the idea is to get you in somewhere near the bottom and then to hold it until you get to D. But sometimes with stops that you put in to protect yourself, to protect your gains, you can actually get taken out, and yet it still goes to D. Other techniques have to give you the guidance to be able to go to that 4th highest peak. But to get there, that's what the Chapman wave is all about. So higher peaks, 1 penny above peak A starts leg B, turns around, gives you a peak B. 1 penny above peak B starts leg C. Leg C concludes with a peak C as soon as there's that inverted V-shaped pattern and a lower high bar. And then the moment you go up 1 penny above C, you start D. At D, other things can happen. It's where normally you could expect, it doesn't have to happen, but that's where you can expect a deeper or longer correction is possible. Aha, finish that. Now, what did we get here? We got a peak D made yesterday and a very sharp pullback. And we'll see now, because at 1254, if the VIX index by the end of the day starts to run into the 1270s, 1268, 1272 area, that's going to suggest that selling pressure has come back into the market. But as long as it remains here in the 1250s, I suspect that the bias will be to have quick pops to the upside with maybe higher highs and higher lows. We'll see. But look at the way that it's reversed at peak C minus in the weekly chart, having made a peak D with a China plunge at 53.29 back in August of 2015. Remember, there was that move that I said it's ridiculous that it's gone to 53.29. There must have been program selling. Something must have gone on in the volatility index. It should not have been higher than 28 or 32. So it was an absolute aberration. But that was definitely a major bottom in most of the indices, and we haven't broken that bottom in all the corrections. So this pattern here suggests that the volatility index is getting a little antsy, but it hasn't really broken to the upside. Starts to get into the teens, 14, 15, you'll see triple digit selling coming to the market. At this point, it just suggests that there's moderate buying, but we've had a spectacular move. As I said, 21% in the S&P weekly chart. You'd expect some kind of a consolidation. All right, well, no, wait. Let me just get that right. ESU 16, yeah, 21.4%. Okay, so yeah, we're going to go on. We want to look at the high-grade copper. High-grade copper is pulling back quite sharply after a peak E in the Chapman wave. That's the 5th highest peak, and it failed at a C in the weekly chart. And all it's saying is that copper is in a trading band. It's got limited upside, limited downside. Could be big percentage moves, but it's limited. Now we're going to look at I would like to look at, what did I not do? Yes, EUR USD. This is the euro dollar currency, made a peak D. There's your peak D, pulling back. We'll see how deeply it pulls back. But look at the deepness of the peak D weekly chart in the euro dollar currency pair. That's a pretty sharp pullback. Look at the H pattern that goes to an M pattern. I drew that in months and months ago. And here we are. This is the pattern that is formulating. And I'll be right back. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. And there's a peak E in the IWM. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I forgot. I was doing this much earlier, and I think as I got into the show, I forgot. This is the 10-minute September E-mini contract. I had a nice low at around about 21.54, spiked up to the 21.61 area. It's having a little trouble there. There's a really good chance that if this futures contract goes above 21.6250, that it's going to retest the high that was made earlier this morning. It was very unusual to go to a C minus, but in the early morning hours, it certainly can based on news. And at 21.6450, that starts a confirmed move towards the testing of this channel line, which is at 21.6525. And it fails if out of the blue you see a slide that goes under 21.57, and it's at 21.5925 right now. So that's that. I want you to just show, maybe I'll show you the S&P cash index. It has gone to a C. It should go to a D. It's done everything that it needs to do. So it's acting quite well. That's a 5-minute chart. All right, a couple of questions here. I wanted to go to some what I consider to be important bellwethers. My GE bellwether is not doing well. It's up a penny. It's not up a penny. It's up 0.00. Ups is up a penny. So it's moving around within a very tight range. This is the tightest range it's had in months and months and months. Now, what's really important about this, the news came out, made a 32.95 high. Remember, what are we looking for? Ds. There's that peak D on the 20th of July. And it pulls back. It pulls back reasonably sharply to the 31 round number low of 3 days ago. And it hasn't broken that yet, but it also hasn't broken the 31.35 9-period moving average resistance. It's really important that it gets by Friday. Oh, tomorrow's Friday. I don't know if we can do that. Above 31.35. I would say it's very important in the shorter term. Otherwise, it's just saying that the market has limited upside based on my using GE as a bellwether. And the weekly chart is going to be most important, because if GE trades under 30 by Wednesday of next week, that weekly chart is going to suggest it was a D and that we're in for consolidation. Okay, that's there are other things that we can look at as well. But I was asked about IBB. IBB has made a peak D, round number high, a peak that was peak D 3 days ago. But today it's snuck above. It went to 299.48. Now, this is very interesting. It's in leg E unless it's recycled higher. I don't see how it can recycle higher at this point, but it could. And as a result, I have to consider that that 299 is very important, because a close above round number 299 in the next 5 sessions would suggest it goes even higher. But 299 on a closing basis is going to be the iShares, NASDAQ, biotech ETFs. That's going to be the key to telling me whether it goes high, because if it can't go above that by Tuesday of next week, that's going to suggest this is an E. But the MACD is so strong, and stochastics at 90%. The weekly chart got until Friday to close above 289.71. A close, I usually like to say decisive close, so let's not say 289.71. Let's call it 292. A close above, say, 292 on a weekly basis suggests that this rally could actually go a little further in the IBB. Very important index. If you look at the Qs, made a peak D, nice little rally today, nice little rally yesterday. So far, this is not the action that you expect from a peak D serious top, more like a D that's going to probably extend and go to an E and even an F. That's the way I'm looking at it, but we'll see, because I'll make it real simple. That 115.59 up 25 cents, a close above 115.45 was the high. 115.63 would suggest it goes quite a bit higher, and a slide with a close underneath the low that was made 3 days ago of 114.22 would be very negative. So now there's a couple of questions I had here. I want to go to, so that was for Terry and the IBB. And I'm going to go to the next question was BIP. BIP, have I ever looked at BIP? Brookfield Infra Partners, Infrastructure Partners, maybe, I don't know. Acting beautifully. Who asked me about that? Peak D, yes, Peaky, that is very nice. This is an A, B, C, D, and I would suggest that this is a brand new B. Whoa. This is very good. Because everybody's talking about infrastructure. If the word infrastructure if it is infrastructure, not infra, then I think you got yourself a winner here, because everyone's talking about infrastructure, like we didn't have infrastructure from the 2008-2009 decline. So I'm going to call this E/B because that's what I always do, just to be safe, just to say, hey, we haven't really got to confirm yet that it's a brand new buy mode. So it could be an E, it could be a B, but it's acting beautifully at 48.11 BIP. That weekly chart, let me just have a look at this weekly, A, B, C, D, E. It could be going, actually I needed to check if I can just do this. 48.12, so it hasn't, this is a gray A and a gray, I can still call it a B, it's not an E yet. So this is actually just a B, and it's a gray B until it goes 1 penny above, 1 penny above. Edit, B. So this is a gray B. Sounds like Graybeard the pirate. Right there. Okay, it goes 1 penny above that 48.12 level, and you're to 48.13, that goes E/B. But look at this, the weekly chart. Nice, nice action. Good eye. And don't tell me this is just a brand new leg A in the monthly chart. You know, I'm going to be having a webinar coming up mid-August. It'll be posted the next day or so. And that is going to be based on the new highs that we made in the Dow and the S&P, all-time highs. What does that mean? Remember, I spent a year ago, I had a webinar saying, what happens if we can make a new high? Is it possible? And I said, yes, I think it's possible. Now we've done it. And what are the implications for the market? What are the implications for your portfolio? When will we get that sharp pullback, which we deserve and which we will get? I think it's coming fairly soon, but we'll see. So BIP acting very well. All I can say is if you're long, stay long. Make one third of your position. You could just treat it as a trading position. I even wouldn't say that if it goes to 48.12, I take something off. I would just say that 1/3 of your position could have a stop around about 46.50, just to say, hey, I want to cover myself, because if it pulls back below that, it could retest the low 45, even the 44 area after such a strong move. But believe me, I would prefer just to stay in it. Is that a brand new A in the month? That's what I was saying. I believe it's a brand new A in the monthly. So folks, if you're looking for a very strong stock, hopefully you can get it on a pullback. But this is acting, it's saying that in this market environment, I am the stock that's functioning best, and that's the way it is. Look at that monthly chart. It goes from 30.50 to 48. That's 17 points. 17. That's almost a double from that level. Whoa. How can I say that? 50, I meant to say that's a 50% gain. Good. Okay. So I'm going to make a note of that because I like it. I like it to keep on a watch list. Maybe it's a little late now to buy it. BIP. Of course, I always have to be able to read that handwriting. All right. Now, I want to go to the next thing. We've got a break coming up. I had a bunch of questions. And yes, Bernie wants infrastructure. Everyone wants GPB, British pound. Wait to next. Oh, that's orbits. And CP, yes, the Canadian, it gapped down. I'd be careful of CP, Canadian Pacific Railway, at 142 down 4. I'll talk about it when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. So I was asked about the SPDR S&P Oil and Gas Exploration XOP. It's up 58 cents at 34.89. Yeah, this is a nice bounce. I don't know if this is more than a bounce, but if you look at the weekly peak D and holding so nicely after 1, 2, 3, 4, 5, 6, 7, 8, about 9 weeks, and it hasn't broken down, I'd say that I'd be able to put in a rectangle formation right there and say that this could trade within that range. So it's acting well. If I remember correctly, a rig I was asked about the other day, and I looked at it and I said, I can see a pop up and all that, but I don't see very much else. And look what happened. I guess there was earnings, and it's up 45 cents, it's up at 10.90. And yet it looks to me very much like it's a pop-up. The technicals are very weak in the weekly chart, monthly chart, and the daily chart hasn't held the gain. We'll see, because if RIG can get to, it's at 10.90. If in the next week, RIG can actually get to RIG, which is Transocean Limited, if it can get to 1166, then I'm going to have to change my opinion and say, okay, it's in that rectangle formation. It can work its way towards the upper band in the 12s, and then you've got to be careful again. Now, one of the things that I'm also looking at here, I want you to check NG, which is natural gas. Natural gas is holding very well after the peak E top and a daily and a peak E in the weekly. So this is what I mean, that if you can hold support, it's really important to do that after a peak D. That's why I'm also suggesting, let me show you the charts. The SPY has made a peak D, and the MACD and stochastic are down. I should put a down arrow, but the move down so far, if there's a very ugly candle, and by Monday, the SPY is trading under 215, then I'm going to have to put a down arrow. But at this particular point, it's just more a sideways consolidation, trading up 21 cents at 216.38. If you look at the IWM also has made a peak E, but did not break down. It was an ugly candle on Monday. And Tuesday was a recovery candle, and today it went slightly. Did it take out the high to 121.21 and 121.19? It hasn't taken out the high of Tuesday. If it does that, that's just saying, hey, we've got another consolidation, and leg D in the weekly chart might become peak E by D by Friday, but that is just a minor little pullback with the MACD and stochastic very strong. It's one of the reasons why I didn't want to go short. I've got a position for my subscribers to my opening call that says if such and such happens, go short. But at this particular instance, we're actually long the Dow, thinking that there's just enough residual strength maybe to move higher, at least if it's a trade, and then we'll just have to switch to the short position if it breaks down. But most importantly, the VIX index is still suggesting at this low rate of 1252, down 34 cents. No, the VIX is down 34 cents, the Dow is down 7, and the S&P is up 1. Something's weird in this picture, because with the VIX down in the below 13, the Dow should be much higher and the S&P should be much higher, yet they're not breaking down. And what I always say about bear markets, and when I said to subscribers to my opening call, I said, you cannot expect, you need, for a bear phase, what you want to hear is bad news any news actually that's being taken very negatively by the market. All rallies fail. The futures are down 12 to 15 points at the open, pre-market, before you even open. And then all rallies fail and you close towards the low of the day and you make triple-digit down moves. That's a bear phase. And so far, we haven't got that. We've got enough residual strength to say there's just enough buying saying we're not breaking down because there are enough buyers, but we're not moving higher because there's enough slippage in many stocks. That's really the way I'm looking at it. So until you release the selling pressure of the actual individual stocks that are weighing the market down, which is not showing up in the VIX index, you won't get that upside spiral, but you are getting support. Now look at the Qs. The Qs, I have to call this a leg B. I suppose I could call it a D in the weekly chart, but that's a breakout in the monthly. Surely this is a leg B. It's not an F. I just don't see how it could be. Everything about it looks like it's holding well. So when I look at the individual stocks that are actually keeping the mark, for instance, CVX has had a rebound and it acted very poorly, but the rebound is important. It's helping the Dow to a certain extent and was hurting the Dow the other day when the Dow was the weakest link and it should have been going higher. Same as ExxonMobil, XOM. And look at XOM. It's trading now at 87.49 unchanged, but has come off the low of 85, double bottom at 85.59, 58, 85.58. So this is not bad action, but it's not great. The weekly PE says it's going to have trouble going much higher. And that to me says it's going to weigh on the market. Now, the question I had about the IYT, so CP was Canadian Pacific. I didn't like it. And the IYT, the Transportation Index, remember I drew this line both in the Dow and in the, in the monthly chart and in the weekly chart to show the intense, let me get rid of this, there are too many lines here, to show you the intense selling pressure. And that selling pressure hasn't allowed it to really decisively break from this big mini down channel. I call it the inside track resistance line. So until the IYT, the iShares Transportation Average ETF, can spike above at 138.52 right now, up 9 cents, until it can break above 147, to be able to tackle that peak C and make at 146.07 and make a leg D, I think this is just consolidating, and it goes together with high-grade copper. It's saying that within the marketplace, there are a number of sectors that are suggesting that there's some kind of a slowdown here. We haven't yet broken out. Okay. Now, the other thing that I want to do is there are certain sectors. For instance, we have a stock, MWA. It's in the water products area, and it's up 73 cents today at 12.10. I just completely forgot to look to see when the earnings come out. Turned out that it was today, and it's up 72 cents, thank goodness, because it wasn't acting all that well the other day. But we've been long for a while in the 10, let me just check, 1067, at 1067 and 1069, somewhere around there. And it's trading at 1209. And this is an area that is saying, just like that other stock we were looking at, which I wrote down, BIP, this is saying, I'm in the marketplace and I'm leading the marketplace. I have wonderful relative strength. And that to me is important. And it's in Mueller water products. To buy it now, I'm not sure if that was a question. Yeah, I suppose you could nibble right now. I wouldn't get a full position, but this is leg C, new leg C in the daily. So there are areas that are working. And I remember yesterday we had that stock that went from the 45.60 level that we bought it at, and it jumped to 49. It popped up to a higher high today. Now it's giving back some of that gain. That single day move, it's suspect, but it was really good. And it's saying that this is a stock that is acting well in this environment. And that's what you really want to see. Be very selective and choose what's working. Because what's not working is really not working. And I don't want to be in anything like that. I don't want to be holding something that's weak in this environment, because when the market actually pulls back, it could pull back much deeper. I'll be back. Basil Chapman, Dow's down 1, S&P's up 1. Paint dry, I guess you could call it. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I was asked about the British pound, United States dollar currency pair. This is making that H to an M pattern, not very good. It's a horrible chart. Of course, British pound has been under duress. And look at this. It doesn't look like it's going to be able to rally above 1.35. And it's a 1.31. I think it's going to the 1.30, 1.29 area. Got to be watching that very closely. Then I was asked about, let me just go through my list over here. CCP. CCP is CareCap Properties, doing very well. I like this. Made a peak D in the weekly. Now it's consolidating. Hit the 200-period moving average. It's bouncing around. It's in a triangle pattern right here. This is what's called reaching the apex very soon. Oh, it's already done that. Oh, yeah, there you are. So it's getting to a point where it's going to break either way. At 29.38, it's up 15 cents. The weekly chart says that it should go to a higher high. It's at peak C. The leg C, it'll be peak C if on Friday it doesn't make a new high, above 30.10. So it's 29.38 right now. It's an IPO, and the weekly chart monthly chart is suggesting that it has a target of 32.5. Doesn't give a time. It just says those 3 points will come in over the period of the coming months. I like it. I think it's acting very well. But I would say if you're going to start a position, you need to start it cautiously right here, 29.37. But most importantly, I'd like to see how it holds 28.47 to 28.30, the 200-period moving average area, because at that level, it'll either make the H that breaks down or a successful H that wants to retest the high just above 30. So I do like it, but a starter position. Another question I had was, so let me just quickly finish that CP Canadian Pacific. The gap down is really a concern. I think that at 142, down 461 must have been earnings or something. This aborted a rally that should have gone to a D. That's number one. Number two is the fact that it's responded. It's trying to come off the low and close at the high, but it's still way down from the gap. I'm suggesting that 139 to 138 is going to be absolutely important. If it fails to hold that over the next week and a half, it's in real trouble. If it manages to bounce from 142.5 to 146.5, that's going to say, great, now it's in this rectangle formation. It's going to digest whatever's happened now and over the coming month to 2 months, it's going to work its way higher. But at this point, do I want to buy it? I don't want to touch it. I want to give it at least 3 days to settle down. Okay, I want to look at now, just go back to that 10-minute chart. Yes, if we can break above 216.150 on the E-minis, that'll be really positive and suggest that the uptrend, the up channel that you got, that dashed line up channel is working. If I even put in a halfway marker right here, that's what I like to do. I like to have inside track support area, inside track resistance. I don't like too many lines, so I would just treat this one here. If you can go to more or less the middle of the chart like that and say, okay, right here, if you don't go to that little ictus right there in the next 3 bars, 10-minute bars, if you don't go to 21.59.50, but instead you're able to go to 21.62 in the next 3 bars, that's going to be excellent action. Just talking intraday on the 10-minute chart. Don't get carried away. Okay. Now let's go. I had a couple of questions about emails. So the FTSE, I don't have the FTSE. Let me just see what the FTSE is doing right now. I have to do it in a different way. Give me a second. FTSE. Let's go to this one right here. The FTSE at this particular point is up 105 at 67.40. That is nice. But it hasn't been reflected here. This is very interesting. There are just enough stocks in the market right here that are not allowing for a breakdown, but they're not allowing for a breakout. So this is a very important period. So what's the question? The exact question is, FTSE 67.40 failed to make, can I read? Failed to make 30-day high on the BOE rate day top. Wave count. I'm going to do the wave count if you don't mind. I'm going to do it here. It's going to be GBDOW, and that in fact up 4.59. Let me do it here. GB, Great Britain, DOW, this is the Dow chart, the Dow Jones UK chart. It made a peak, DE. It made a peak. See, this is exactly what I'm talking about. I see strength here, just enough strength that I don't want to put a down candle. There's your peak E. I'm sure that the actual chart of the FTSE looks very similar to this. 299.90, 29. Yeah, there it is. Leg D in the weekly. So many charts in D in the weekly, but they're not breaking down yet. So I'm impressed. I'm saying to you that somehow, some way, there's no other alternative that I can think of other than the stock market if you want capital gains. That's just the way it is. And I'm suggesting to you that there's just enough strength to say we could have a rally for maybe a week or two. Doesn't have to be strong, even if it's just to get the Dow to 18,623, a little bit higher than that, to get that leg D. And then I'd be very cautious. And even that cautiousness should be based on looking at overbought areas. So I don't want to get carried away, because if the Dow suddenly drops below 16,200 in the next 2 days, I'm going to be looking at something else. So Dezuga in the Den says, hello, Basil. I don't know if you have talked about bottom on oil, but can you talk about it? Okay, it's a good point, because I want you to talk about it. This morning, I was about to go for a second time to try to go long crude oil. I decided to be a little bit cautious because I still see enough strength in gold. I thought gold was pulling back, but it held really well this morning. And it's even holding quite nicely now. The GLD is at 52 cents. So we went back into an ETN that is made up of crude oil, natural gas, gold, commodities. It's just a real great mix. And it's pulled back very sharply from where we had it. We got out and then went even higher. So we went in this morning, and it's a little bit, I don't even know whether I should say that we went in this morning, because I don't want to give it away now because my clients have just got it, my subscribers. So I just want to check something. I'm sorry. So I need to go over here. And I'm putting in the symbol just to see. Yes, we did get it. Okay. Whew. I was wondering about that. Let me just read what I said. Start very small long under 1420. And the low today was 1409. So we were in. Okay, and now it's at 1426. So we've gone into something that would be a general ETN with a mix of the commodities. I've been bearish in the commodities for a little while. Now I'm beginning to become much more constructive. Oh, there goes that buzzer. So I'm looking at this, and now Crude oil is made in leg A. It's a leg A with, I need time. I want to discuss this. In fact, it's worth it because if crude oil can actually rally quite strongly here, we will start to see something. We'll see this relationship right there. Remember, here's the crude oil. SPY hasn't caught up yet. Green is SPY. Red is the USO, United States Oil Fund, 5-minute chart. I'll be back. Basil Chapman will talk crude oil, and I'll be doing Tom's show between 4 and 5 this afternoon. Really looking forward to that. Hey, I'll be back straight after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I had a quick question about CPA, which is Copa Holdings. Huge move up. Must be news rate up 890 at 74.60. This is peak A, B, C, D. This is a very strong E right now. And the weekly chart has gone to an A, B, C. This is a D. And the monthly is in leg C. So this is acting very well. Copa, I thought there was a college, online college. Maybe not. Copa Holdings. The next question I had was Latin America, CPA, Latin American Airlines. Oh, that's right. So Latin American Airlines doing very well. Good. So that's acting nicely. And so the XAL, let me see what the XAL is doing. XAL, not very much. XAL, the airline index is not well. MAN is Manpower Group. It's just doing okay. It's not doing great. Good question, because this is the time that you would expect to see it. MWW is a big one in Waltham, I think. Monster Worldwide. doesn't look good at all. Boy, the job search, terrible. And Home Depot, and then I want to get back to the crude oil. Home Depot made a peak D. Today's a peak D, leg E. This is going to be a tell, because if Home Depot starts to decline here, and you saw how badly the General Motors and Ford have been doing, the big products that are household products, household goods and services area together with the jobs, this is not such a good sign. So I'm not going to get into politics. I just wanted to say, I don't know why there wasn't a Republican thing that said the economy. That's all that needed to be said. The economy, and that would have been a good slogan. Okay, now let's go to the oil. So I'm looking at crude oil, and you've got the CL right now at 41.50, up 66 cents. This is a V-shaped bottom, but to have a V-shaped bottom that is a successful bottom that can turn around for a trend reversal, not just a short-term bump, you need to see something on the left side, at least a peak on the left side. If there isn't, there has to be a candle on the left side, a moving average. None of that's there except for this little candle right there, the doji candle of the 26th of July, and that's at 43.39. If there is a V-shaped recovery and it needs absolute speed, in other words, it's got to go through tomorrow, Thursday is today, you've got to go through the end of the day, into Friday, into Monday, probably into Tuesday at this time during my show, 11 o'clock. And then if that's going into the 43.50 or higher area, you've got a V-shaped recovery, and then 45.09 is a 9-period moving average. If it just bounces and by Monday, Tuesday, it's back at 40.50 or lower, that's really negative. And the monthly chart is the one that has the H pattern. And from here exactly is where you want to see, both in the weekly and the monthly, some kind of a trend to the upside take place. You have to see the 45s real soon in the weekly chart for you to say, great, that was a consolidation, and crude oil is now going back to the upper range in the 50s. I just don't see it yet, but I do see a real nice move. That should be helping the market, and it's not, but it might happen by the end of the day. So, okay, we're about to be wrapping up. I'm going to be doing Tom's show at 4 o'clock till 5 this afternoon Eastern time. My pleasure. Don't forget to check out my opening call, and I will be talking more about my coming up webinar. Now that we've made all-time highs, what's next? I say higher highs over 2016. All right, I'll be back later this afternoon. Meantime, back at the ranch, watch the VIX index. The VIX is at, now it's at 1232. If it pulls back to 1220 or lower, this market will start to climb and hopefully hold there on the upward trajectory, closing at the high of the day like it did yesterday. That's very important. Believe me, a minus 40 on the Dow today would be very negative. I like what I'm seeing just on the very short term. Let's see how we close. Basil Chapman signing off. I'll see you a little later today, otherwise tomorrow at this time. Have a great afternoon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,